Bitcoin broke $81,000 and is holding confidently above. On the chart, we broke a long-term trend line and the crowd is already celebrating a new bull market. But do not let yourself be fooled. We saw the exact same growth and fake breakout in 2022 before a historic crash. I closed my short, but I'm not jumping into longs. I'm waiting for a seller reaction to short the exact peak again. And now I will show you on the chart why this growth is an illusion. Daily market review, Wednesday, May 6. Let's start with technicals because the market structure is critically dangerous right now. Bitcoin grew by 36% and open interest is hitting yearly records. But spot demand is dead. The Coinbase Premium index remains negative. American investors are not buying Bitcoin. This entire growth is dragged by late longs with giant futures leverage. Why are we growing at all? Because funding is still negative. The crowd doesn't believe it and is shorting, and the market maker is simply dragging the price up to liquidate them. Therefore, we see green candles. But open the liquidation maps and heat maps. The upside is already limited. Liquidity above is ending. We swept the main pools of shorters, but below, billions of dollars of longs have accumulated. As soon as the fuel above runs out, the market will drop like a rock for the liquidity below. Now let's move to macroeconomics, because a disaster is brewing there. The US stock market is overheated like never before in history. The Wilshire 5000 to GDP indicator reached a record 226%. This is 80% higher than at the very peak of the dotcom crash in the year 2000. The gap between the real economy and stock prices has never been this huge. Crypto correlates with stocks, and when this bubble bursts, we will fly into the abyss. And the trigger has already fired. The bond market is in shock. The yield on 30-year US treasuries is jumping abnormally. Someone is aggressively dumping American government debt for billions of dollars, and that someone is the Bank of Japan. They started a harsh currency intervention, crashing the dollar-yen pair to 155. A strengthening yen means that unwinding of the carry trade. Global capital is forced to close credit positions worldwide. This will trigger a synchronized dump of stocks and crypto. May will be a month of maximum risk. Perhaps markets are trying to grow on the back of the Clarity Act. 3 weeks remain until the main crypto bill in the US is passed. A compromise on the stablecoins has been found. This is a great foundation for the next cycle, but it does not change the fact that we are currently in a bear phase. My strategy: I remain on the bear side. I closed my short and waiting for the perfect entry point from the upper liquidity boundary. Are you in a long or a short right now? Let me know in the comments. Subscribe. We continue tomorrow.